All right, Matt the Mortgage Guy. In today's video, I'm talking about are home builders getting desperate? Incentives we're starting to see, negotiations that are taking place, exciting times for Harry home buyer. I'm going to tell you what to expect, how to negotiate, and what this means for you as a buyer of a new build. All right, Matt the Mortgage Guy, residential mortgage broker. For all of you who were in the market in 2020 and 2021 and were frustrated by the strong arm of the builders who just had lines of people, they had people bidding for homes, they could call their price, they could call the terms and all that other stuff. Now is your time. August of 2022, the tables have turned. And in this video, I'm going to talk about stuff we're starting to see. Home builders are boosting incentives as they suddenly struggle to sell homes. So stay tuned. Steps 1 and 2, if you're a buyer, step number 1, get yourself pre-approved with a great broker. Go to greatmortgagebroker.com, fill out that quick form. That's me and my personal team. We'll be in contact in the next 24 hours, greatmortgagebroker.com. Step number 2, after you're pre-approved, is connect with a great agent who can negotiate with you on a new build. homeandmoney.com/Matt. That way you're connected with a great agent. You just don't want to walk into a new build community and be represented by an agent who works on their team. Go to homeandmoney.com/Matt. Okay, with all that stuff out of the way, now you're ready. Let's start talking about what's happening in the new build community. Early 2022 and all of 20 and 21, builders really called the shots. Now, as home buyers start to back out, as things start to change, as demand starts to come down, home builders are singing a different tune. It's fun for me to watch because I'm on the buy side. I'm on your team, right? I want buyers to win. So of those 60,000 cancellations we saw in June on home contracts, that was a stat that I shared in previous videos. A lot of those were new builds. June new sales on home builds was down like 17%. All of this just means that builders are going to have to start playing ball, right? They can't just have people bidding on houses, put any price out there and expect to have a line down the street, right? For you as a buyer, this is all good news. All the home builders are feeling it. Most all markets are feeling it, especially the markets where they built really, really aggressively. They see the numbers, they see the demand, they see how many tours are happening, and they do a couple things. One, they offer incentives to sell what they have already built faster. And 2, they start to change their schedule for how many builds they're going to build going forward. There's less starts. There's less, permits being pulled, meaning they're building less going forward because they see the change in demand. So all kinds of different builders have put out stuff on this. Pulte Group, one that does quite a bit of work all over the country, reported that new orders for its homes in the second quarter of 2022, we're down 23% versus 2021. That's a big number, right? And they've got a cancellation rate of 15%. Later in this video, I'm going to tell you a story about cancellations and a great conversation I had with a client out in Texas. This 15% cancellation rate for the new builds is up from 7%, doubled from the year prior, right? So this is really like a trying time for some builders and a scary time if you're on their side of the fence with billions in inventory for some of them, at least in the hundreds of millions in inventory. Ryan Marshall is the CEO of Pulte Homes, great dude. And he's honest, he's straightforward. We have to work harder to sell homes. We have to be more nimble. Home price appreciation has slowed, stopped, or through the use of incentives is taking a couple of steps back. So, through the second quarter, Pulte Homes, and Ryan says this in his, interview, incentives were mostly tied to the mortgage back in the second quarter, but going forward, they're going to expand their incentives to include discounts on options, a lot premiums, and other stuff, right? So what are the things you might see incentives on? And what are some things that I would be weary of if I were you as a buyer? Well, one thing that you should be weary of straight out of the gate is when somebody tells you, oh, here's a $24,000 upgrade for this style counter. Something to that effect. They can put any price on that they want, right? I always use the analogy because I think it's really funny with Kohl's. Did a great job of marketing, did a great job. There's a retail clothing store. You would go in, everything would be 50 to 60% off. Sounds like a screaming deal. Look at that sweater, originally $99, on sale for $39, 60% off of that sweater. Is it though? Is it a $99 sweater? When they tell you you're getting a $24,000 counter upgrade, are those counters really $24,000? Or do they cost $8,000? But when they tell you they cost $24,000 and give you that as an upgrade, you feel really good, right? So be careful for that stuff. I did some digging, and I think this is really, really interesting to look back at 2007 when new builders back then started to have to offer more and more incentives, stuff that we might potentially see in the future, 2022, 2023, if builders with the slowdown in demand decide we got to get more aggressive about selling these homes. We don't want this stuff to sit. And so these are incentives from 2007. I found this list. I thought it was pretty cool. Mortgage payments. Builders were offering to pay up to 4 mortgage payments. So move in. Don't pay anything for 5 months. However you work that into the thing, it really, if you have a $3,000 mortgage payment, is just, here's a $12,000 incentive. That'll cover the first 4 payments. Not really that big of a deal, but for some people it sounds sweet, right? Like no payment, no rent payment or mortgage payment for 4 months. Really cool. Closing costs is one that was around back then. It's still around today, depending on the size of the house and the different things, title fees, lender fees, prepaying your property tax and insurance. Closing costs might range from $5,000 to $25,000 on more expensive homes. Builders paying those is something that's happening now and was happening then. This list also includes property tax and homeowners insurance. And rather than you prepay it, the builder prepays it, which is really similar to closing costs, just different, right? So another one back then that you might start to see now is these free upgrades, right? Granite countertops, swimming pools, hot tubs, basements, appliances, all these other things. I don't know how much it's, with today's home prices, a free fridge and an upgrade on counter is really going to entice somebody to go buy that new build for $725,000, right? Because what we've seen is those prices continue to go up. Then when you attach a 5% interest rate to it, $4,200 a month is just too much for some folks, right? Give me a free fridge and some nice counters. It's still a $4,200 mortgage payment, right? So it might be incentives to buy down the interest rate. It might be that you have to chop your price, whatever the case may be. I don't know how many people are going to be lured in, regardless of how nice the fridge is, right? Because that's the last resort. Cash discounts, lower prices. You go from $725 to $695, and builders are going to have to do this as they've seen this, growth skyrocketing. And if they sold their top ones at $725, they might have to come to $705 to $695, and that sets that ceiling at $725 for that community. So we'll wait to see. Told you I was going to tell you a story. I just wanted to tell it because I think this is something that's really common and we're going to see more of. Had somebody reach out to me who follows the YouTube channel, buying a new build in Texas. We walked through and talked through his specific scenario. What should I do? The rate is this. I got in contract 12 months ago. Sure, I have a $15,000 deposit down, but it might be better for me to lose that $15,000 deposit than be tied to this $3,500 a month mortgage payment, especially considering my take-home pay after taxes is really only $6,000. After some talking through, I said 100% I'm on your side, that I think that tying yourself to this large mortgage payment that causes you stress before you're even in it is definitely something you shouldn't go forward with. If you feel uncomfortable now, what's going to happen when a couple things go wrong? You've got an unexpected expense here or there. Don't put yourself in that position. I don't think anybody should, right? Told him, just as a piece of advice, I'd go back to the builder. Explain. It's either a large credit to buy down the interest rate to save me hundreds of dollars a month. It's a concession on price. It's something, But if we can't do any of that, I'm backing out, right? And you've really got nothing to lose as a buyer except for this earnest money deposit. So part of my advice moving forward to anybody is make sure you're connected with a great agent, one who really knows about construction, home purchase. And I wouldn't put $40,000, $50,000 earnest money deposits down. Builders were forcing buyers to do this. I don't think they'll be able to. They don't have as much leverage nowadays. Non-refundable deposits, those are really scary. If it's $8,000, $10,000, $12,000, and you decide against it, all good, right? If you've got a $40,000 deposit, that's going to be a harder thing to back out of. So a great agent who has their finger on the pulse of the new construction market and the area, they're going to be able to get in there and negotiate you a deal. Again, homeandmoney.com/Matt. That's how you connect with a great agent who's going to, I guarantee you, because we're going to track metrics, how quick they respond to you, how good of service they give you, right? homeandmoney.com/Matt. Go there and connect with a great agent anywhere in the US. This agent operates on your behalf. So I have to remind you again, don't just walk into a new build site and say, who can help me here, right? Connect you with their agent, connect you with their lender. Another fun fact is that 73% of people who bought new construction used an outside lender. You know why they used an outside lender? Because they got a better deal. The other 27% either didn't know that they could choose, or as is in the case with some, maybe using their lender, you get $10,000, $12,000, $15,000 incentive. A great lender who's honest with you on the outside is going to be able to compare apples to apples and say, hey, they're offering you a $10,000 incentive, but their loan costs $14,000 more. Use me and save $4,000. Or, as I did many a times over the last 2.5 years, guess what? Their loan is about $6,000 worse, but with their $12,000 incentive, it's best to use them. Save my number. I'm happy to help you in the future. Since they're connected, a lot of times the builder owns the lending company. They're able to offer you that. All good. Get yourself closed. Let me know if you have any questions. But for the future refinance, for any future purchases, give us a call first. We're priced lower. We just don't have that built-in incentive because we don't have the relationship. The builder doesn't own the lender that we're using. So that kind of stuff, right? So research the financing. Look at outside financing. Don't have to go with the builder's lender. Some people assume that wrongly. So moral of the story, more builder incentives coming. It's just fact. Go out there and negotiate. I had somebody who sent me a message. I haven't been able to get with them on the phone. They said $100,000 of incentives was being offered on a $650,000 house. I'm excited to hear about that. If you've got stories about builder incentives in your market, please, please, please comment below on the YouTube channel. Send us a message, team@mtmg.com. I'd love to hear the stories. It makes for great content. It makes for me having a better finger on the pulse, being able to help educate other folks around the country. Thanks for watching. And until next time, we gonna see.